PMI. Kind of reminds me of TMI. We were just on the topic about down payments and how low you can go. Well, when you do go below the threshold of 20%, typically you have to pay something called PMI, or private mortgage insurance. The name can be a little different depending upon the program that you're using, but essentially this is a type of insurance. Because you have less skin in the game, it's considered riskier for the person who's lending you, frankly, hundreds of thousands of dollars here, right?
I'm a little worried about this Solozzo fella. I want you to find out what he's got under his fingernails, you know?
So in order to protect them against the possibility of you defaulting on your loan, they decide to purchase some insurance, or frankly, they're making you purchase some insurance just to make sure that it's worthwhile for them to even fund the loan.
I don't like violence, Tom. I'm a businessman. Blood is a big expense.
Don't let that stop you. Even if you're an investor, there's all kinds of advantages to being able to leverage a huge amount of other people's money in order for you to control these assets. But that is a topic for another video. My name is Dana Nyce. Thanks for watching this frequently asked question, and I will catch you on the next one. Please remember to like, subscribe, and comment. Please ask me the questions. I love to talk and blah, blah, blah. I messed it up. You're going to have to cut it at some point.
I don't know. I thought that was good.
You like that?
I liked it.
It is true. I do love to talk.
I know you do.
So,
and everyone will know that.
Yeah, so reach out to me. I'd love to talk to you.